Let's take a look at some information charts on Balancer for Brave New Coin. Balancer is your traditional AMM DEX with a bit of a twist in that you can have variable pools, variable components of those pools. The pools will automatically rebalance. Ideally, being capital and gas efficient, as they go multi-chain, this will be increasingly possible. You can get the best deal going multi-chain, multi-DEX, multi everything. At the end of the day, everything's going to merge with everything else. And there's probably going to be two types of pools. Pools that are completely KYC AML'd and then pools that aren't. The pools that aren't are going to shrivel and die because most of the real capital is going to go to the pools that are KYC AML'd. The DeFi people don't like hearing that, but that's what's coming for sure. So be prepared for that within our lifetime, certainly. And Balancer is just like any of the other swap platforms. So from a UI perspective, I don't think they have any more work to do. They're keeping up with everyone else in that regard. And they have a variety of different pools. They recently added stable pools like Curve. All of these DEXs that specialize in one thing, like Curve, are at the risk of being kind of disintermediated by others, outcompeted by others. And what sets them apart, Curve from Balancer, Balancer from Curve, or Sushi from Uni, is always going to be the treasury components, how they use that treasury, how they innovate, how they are different from others in a staking, lending, borrowing perspective. Do they have their own stablecoin? Could one DEX theoretically do everything? I think it could. I think it could have its own stablecoin. It could have its own lending and borrowing market. It could have its own pools. It could have stable pools, right? As we continue to unlock new technology as far as the possibilities, eventually this just leads towards aggregated liquidity on everything, kind of like the ZRX dream. And it's very likely in a zero-sum game type of style where, Uni's the leader right now at 52+% on any given day of the volume. And that leaves less and less room for things like Balancer, which is why they have to go multi-chain. They have to stand out in some way to compete with the big boys. So they did so early this month, July 5th. And we'll see if this is enough to keep Polygon afloat. There's just so much going on right now. Layer 2 chains, there's a ton of new proof of stake chains that may or may not be able to outcompete ETH at the end of the day, which I doubt it. ETH just has such a big attention capture from everybody, whether it be devs, whether it be speculators, new users, apps, interoperability. It's just so strong with ETH that it's hard for me to see anything else outcompeting that, definitely in the near term. ETH would definitely have to collapse under its own weight in order to falter here. It's just got such a massive lead on all the competition. They released a version 2, Balancer did, in May 11th, continually trying to keep gas costs down. They redesigned the interface. And like I said, they launched stable pools as well. July 8th, they have no reason not to do so, right? If Curve is doing something well, just incorporate it. And that's part of open source code. That's part of the DeFi mentality, really. If we look at Balancer amongst everything, multi-chain, including PancakeSwap, stuff like that, it is number 12 with total TVL at just over 2 billion. TVL in general across the board has stabilized since May 18th. When everything got slaughtered. And on the ETH chain specifically side of things, it's slightly upticking. Not by much, but slightly. And most of the TVL still stands on DeFi relative to every other chain. If you look at DEX TVL specifically, they're number 5. Again, this is all multi-chain stuff. And depending on how you want to count Uni version 2, version 3, right? Multi-version, multi-chain, this stuff's going to get more and more difficult to view correctly unless it's aggregated. As far as Balancer's TVL specifically, their TVL has kind of waxed and waned as they add mining incentives or liquidity incentives, however you want to think about that. And there's kind of this yin and this yang between having liquidity incentives to bring people onto the chain while kind of destroying Balancer token price in the process because you're inflating it super quickly as far as the circulating supply is concerned. Certainly the hope is that by bringing liquidity mining to any DEX, you're keeping users there, but that isn't really the case. They just go wherever the incentives are. And the supply side incentives are sitting solely on Uni for the most part. If we look at monthly volumes over the past couple of years, Balancer in the gray down there continues to be significantly less than all the other DEXs I don't really know why. Maybe it's still a bit too hard to use, not intuitive enough. Maybe they didn't capture enough market share early enough to where everyone else has kind of moved on to Uni Sushi Curve, Bancor, SNX. I don't really know the reason. It just hasn't quite caught on yet. The flip side of this is they have a significant amount of market share opportunity, I guess, to capture in the future, considering they have a very small slice of the pie currently, and Uni dominance is still 50% any given month and any given day. If you look at some more stats from DeBank on Balancer with Ethereum specifically, again, that TVL has sort of waxed and waned a little bit. Trading volumes down significantly since May 18th. Transactions just continue to creep lower and lower and lower and lower and lower, and users flatlining since May 2021. Never really gaining significant amounts of users. It's had its moments where it probably saw a lot of routing at times when it made sense to do so, but really it's just flatlined. So collectively, for the exchange and for the token, like this is not bullish to see users disappearing, transactions disappearing, and volumes especially disappearing. So it makes sense that the token has gotten slaughtered over the past few weeks, certainly. And we can look at market cap versus annualized revenue on a 30-day rolling basis over the past month. Across the board, PE ratios, which is what these are essentially, have increased for most everything except SNX. Balancer is still near the bottom in the PE ratio relative basis, suggesting that there is definitely growth here relative to everything else, right? Uni's PE ratio is basically 2x Balancer. So in a vacuum, you'd want to focus on Sushi, Balancer, Compound, Aave versus the rest of the pack. I don't know if it'll necessarily play out like that, but that's where we sit currently. And if we look at the token stats, the on-chain stats for the token, transaction counts have never really held significantly above 1,000 and are basically at multi-month lows here. So that's certainly not bullish. Average transaction values falling off. So it's just like, there's not a lot of activity on the exchange or on chain. NVT, kind of meaningless chop, not really giving you much of a signal. It's declining recently, but I don't really think that's meaningful. And active addresses, much like the exchange itself, just sitting at multi-month lows. So not a lot of bullishness as far as the fundamentals are concerned, despite continued upgrades and improvements on the protocol side of things. They definitely have some catching up to do based on user numbers and metrics. On paper, I think they're positioned well compared to everything else, compared to Uni, Sushi, Curve, Bancor, SNX. I think they're positioned well. I think it's just going to take some time for the users and transactions and volume to return. If we look at technicals, they had a death cross post May 18th. That was basically the bottom. And at that time I was saying, yeah, this looks good. This looks bad enough to buy, rather. You had your W double bottom, retraced all of the January stuff in a lot of VPVR support here. And there are some remaining pivot supports here. If this goes below 12, this almost certainly goes to 7 and retests all-time low. So you do not want to see that. This could be putting in a diagonal inverted head and shoulders with a breakout of around 20 to 22 in the near term. So shoulder, head, shoulder, kind of like the DXY chart, oddly enough, where it has this diagonal shoulder holding it down. I don't think this is a descending triangle. I don't think this is anything particularly super bearish, but if it makes any new lower lows, watch out. Because the fundamentals, right, are not on Balancer side from a token perspective. So there was a lot of speculation in January across the board on everything. And for this thing to recover, it probably needs those fundamentals to recover on the user side of things. Speculation could lift this out of the doldrums, looking like that very well may be the case. But ultimately, you need users to come back to the exchange for sure. If we compare BAL to BTC, ETH, and the other competition, it generally looks pretty weak across the board and had this great opportunity throughout early 2021 for an ascending triangle against BTC. It broke out and then immediately broke down with everything else. Now it's got this inverted head and shoulders opportunity like the USD chart. Tons of volume resistance on the way up, but it's definitely something to watch. Anything above 001, and you can probably get more optimistic here. But it's got a death cross. It's below the 50. I mean, there's no bullishness here just yet, but this could be a bottomy type chart pattern to watch for throughout the next month. Anything above 0.1 and you're probably in the free and clear against ETH. I don't think I've seen a more bearish chart than the BAL ETH chart. It did finally bounce a little bit as RSI hit near zero in June, but it's on that decline again. Really no strength relative to ETH, no strength relative to Uni, just keeps putting in effectively all-time lows and gets denied at the 50. No strength really relative to Sushi, even though it's kind of just sitting here flatlining. Another way to look at all of these is by market cap, is compare market cap, compare diluted market cap against Curve. It's just flat, no plus or minus necessarily. And against BNT, it's just been kind of down. So a way to evaluate all of this, again, is I think it's mostly a zero-sum game. Where's the volume? Where are the users? Where are the transactions? First of all, then look at on-chain stats. Look at the Unisushi, Curve, Bancor on-chain stats relative to the BAL token. Look at market cap. Look at total diluted market cap, and you can also look at stuff like PE ratios. Even though this looked and looks incredibly bullish relative to everything else, I just don't think it'll necessarily play out that way. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme Finance non-custodial portfolio management tool, where you can see everything, including AUM allocations performance. You can see all of the DeFi coins I'm trading here, as well as all of the yield plays currently active in Aave, Compound, and Yearn. And on the back end side of things, as far as yield is concerned, what I'm able to see is a giant list of everything that's connected to Enzyme and where I can get the best yield. At one point in time, BAL was up to 20%, SNX 20%. Those have come down considerably, but that definitely influences the trading decisions beyond just price. What do yields look like? What are the incentives to hold this thing other than just near-term price action? So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.